Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index held firm near 101.4 last week. June is now on track to deliver the dollar's strongest monthly gain in nearly a year. Rising Fed rate hike expectations, hawkish signals from Warsh, and a US-Germany yield spread above 150 basis points continue to support the dollar. Middle East tensions have also pushed energy prices higher, forcing markets to rethink the Fed's policy path and strengthening the US exceptionalism narrative. WTI remains highly sensitive to Middle East headlines. The latest tanker attack came shortly after the US and Iran reached a preliminary ceasefire and Strait of Hormuz navigation agreement, damaging optimism around the recovery of shipping flows. The UN Maritime Agency has since paused its vessel guidance program, adding further uncertainty. With Gulf storage only around 50% to 60% full, any prolonged disruption could force producers to cut output. Oil prices are now pricing in a higher risk of Middle East export disruption. Gold rebounded from this year's low of $3,959.50 to trade back above $4,000 per ounce, but the metal is still on track for a weekly decline of around 3%. Hawkish Fed signals have outweighed support from US-Iran peace efforts. Gold found some relief after PCE inflation data came in broadly in line with expectations, pushing the dollar and treasury yields lower. However, markets still see a high probability of further Fed tightening, keeping gold under pressure. Yen spent most of last week consolidating just below 162, close to multi-decade highs. The yen's continued depreciation has become a major focus in global FX markets, with Japan increasingly concerned about excessive currency moves. Recent talks between Japan's finance minister and the US Treasury Secretary have fueled speculation that both sides may coordinate action if needed. Euro weakened further last week, hitting a fresh one-year low and slipping toward the 1.138 area. The pair is now down as much as 6% this year. Although the European Central Bank raised rates 2 weeks ago, the benefit to the euro has been completely offset by the stronger dollar. Markets are now focused on upcoming US inflation data.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.